Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. So today we have our frac spread count show, and we're going to talk about the frac spread count. How has this been seasonally impacted? What's going to happen going forward? We're going to look at rig counts, and then we want to look at some of the key drivers of different flows on the oil side as well as the refined product side. So just getting right into it, when we look at the frac spread count, you can see that we've dropped by 10. We went from 256 to 246. Now, there's a mixture in that in terms of the heat. So for those that are in the south, this is kind of that last bit of heat wave that we've seen. We know that ERCOT has put out another warning saying that there is a risk to demand, when you look at, or I should say power outages due to demand and the lack of available electrons. And again, that impacts equipment. So here you can see that the Permian has fallen. You're starting to see some weakness in West Texas. Now, one of the things that we were saying is we thought it was going to kind of finish at a little bit of a flat lining, and then we were going to start to see those increases pick back up in September and October. As we covered in the EIA show, we talked about how this is the last end of that heat wave or those heat domes that we've seen, and things are going to get a bit cooler, which will then allow some additional capacity to come back into the market. Now, it was interesting because I was having a really good conversation with a potential client, and they were talking about how the consolidation in the Permian and in the other areas, you're starting to see some efficiencies that are happening. And for those that have been listening to us and reading our stuff, we've been talking about a manufacturing mode. And the manufacturing mode that we've discussed is just we're getting to a point where you don't need the same amount of ducts, you don't need the same amount of rigs and spreads, because you're starting to see things move in a fairly steady clip. In the past, you'd have to, lay down your stuff here, put it onto trucks, move it to the next location. But a lot of companies have now purchased in specific locations so they can run in straight lines. They can create those efficiencies. Now, we have seen some additional movements from, the dry gas into the Western Texas. That's something that is going to start to slow down now, just because you're starting to see natural gas find a bit of a floor at 250. It's not that we see a huge increase. We do think that there's some opportunity as we get into the end of September, October. Obviously, we're in shoulder season, not the best time to be a buyer of natural gas. But you're starting to see the companies and the E&Ps, they've had their come to Jesus moment. They're looking at this and saying, why are we overproducing? So we've seen some additional flows away from dry gas into Western Texas, things that aren't a huge distance and can easily snap back, trying to capture some of this opportunity. We had some increases in the Anadarko Appalachia. We did have some seasonal slowdowns, which normally happens in some of the smaller basins. So that's why there is a seasonal adjustment. And then there's also the weather side. Obviously, rigs have come down. We do see that bottoming here and starting to increase. And not a huge clip, but at least a stabilization and then a steady increase and steady rise as we get into September. Here, when we look at the North American market, you can see that land, the oil and gas side, the oil rigs dropped by 8, gas dropped by 2. 5 of those were horizontal. So again, there was a meaningful drop when you look at the fact that we went from 572 to 567. Because remember, we've talked about the importance of horizontal in that level, and there was another sizable drop. When you look at what drove it, New Mexico dropped by 5, Texas dropped by 5, Louisiana dropped by 3. So again, this was a sizable drop. A mixture of this was obviously seasonal, but also weather related. So we do think that starts to adjust a bit. But we also said that when horizontal rigs were at 580, so and here we are at 567. So I think we've come to a point where if you stay long enough, eventually we'll be right. When you look at the horizontal rig side, there's been a lot at play here in terms of labor costs, in terms of heat, in terms of just, some of these slowdowns and just rigs that aren't operating the same level. So you've seen frac spread counts kind of come down and finding this balancing act. And we do think that we find that balance and then we start to see those increases. But again, the increases are only going to be September, October. November and December are you have your typical seasonal slowdown. So there's only really 2 months left of a bigger increase, which is why we took down our estimates from 12.7 million barrels a day to, some range between 12.5 and 12.6. But just based on these numbers, 12.5 is probably the right number on an exit rate as we go into next year. So when we start looking at the market in general, in terms of gasoline, you can see that Europe started to bottom. It's marrying kind of where we were in 22, 21. 2020. It's going to be interesting to see how quickly we see that run up. Asia Pacific is marrying very closely to what we were expected. We finally started to get a little bit of an increase in North America activity. That's something that will likely flatline just a bit, but again, we'll get one more nice spike as we go into Labor Day. China's woken up just a bit, which is nice. You can see that it's starting to run a little bit higher, and it makes sense when you compare to where things were versus 2022. For those that remember, there was some sizable declines and lockdowns that happened in some big areas. And that is really what kind of flatlined 2022 when you look at China. That's not happening here, which is a net positive. So again, kind of the balancing act where we are starting to see a little bit of a wake up, which typically happens as we come into the fall season. Now, this is a key piece when we start looking at the components of where we sit today. And we talked about this in the Econ show, but I wanted to pull this out and talk about it again because household excess savings based on this chart have been exhausted. Now, for those that have been following us, I've been saying that we're somewhere between 400 billion left in savings to actually negative. And that delta, you might be like, whoa, that's a big delta, Mark. Like what that's you could drive a truck through there. But what we're saying is what's left is locked in the top 1% or top 10%. And that likely will stay in there. But the people that need it the most, let's call it the bottom, 80% of Americans, have already seen it dwindle and go away. And that's something that you could say, it's like, well, how do you know? Well, all you have to do is look at credit cards, look at credit card information, look at some of these key pieces, and you're seeing some of those levels, dissipate and some of those problems that we've continued to see. On the truck tonnage side, you can see that there was another drop. Now, for those that have watched us on the EIA show, on the Econ show, our view is that you had some slowdown, but we do have a bit of a pickup as we go into the end of August and realistically into September, as you do see some growth, some opportunities, just based on that balancing act, because we do have obviously Thanksgiving, we have Halloween, Thanksgiving, Christmas, where you get some of that additional flow. Some of that was already booked because rates got cheaper, rates have stabilized a bit. So again, we're not going to get a huge amount of buying from the US. And that's going to, again, limit some of the additional truck tonnage. So that's, when you think about the people driving, that's less gasoline, less buying, that's less diesel. So then when you start looking at China for this point, China's apparent oil demand hits a high, but China's oil imports have rebounded. They continue to be on an elevated level. But what we've been talking about is a lot of their underlying pieces are in contraction. So you're not seeing a huge increase. Things are a bit slower. And because of that, even though the oil's coming in, it's being created into product and actually being kicked right back out, which we're seeing here. So there was about, as we talked about on the EIA show, there was about 25%, about 27% of the volumes remaining of volume. And here you can see that the China has now tied, I think at this point, for the highest amount from 2022. So again, you're starting to see a bit of those about those levels. And here you can see that India remains at the higher end. So they're sitting there and just dumping out a significant amount of product because it's there. They have a ton of it sitting behind. And if you look at just the paper cracks, which we know are just an estimate, there's a ton of opportunity for them to export a significant amount of product and capture a healthy margin. Now, as that hits the Singapore market, the Asian market, Because if you remember that east to west flow, that arb is closed. So a lot of this is going to hit that market, which will then depress pricing there, opening up some of that arb. And then you'll see some of it continue on into the, the Middle East and Atlantic basin. So again, they're capturing this, and this is important to see because there's a lot of front running of the usage of the remaining second batch, and we are due for the third batch coming up, which again is going to help China continue to export this here. Then when we look at product flows coming from the Middle East, you can see that there has been a huge surge of product coming from the UAE and Saudi Arabia. UAE is at the highest going back to 2019. Saudi is at the second highest going back to 2019. So even though we've seen a bit of a slowdown of flows of crude coming from Saudi Arabia, they're maximizing product. Now, Kuwait is on the lower end. We've seen some turnarounds that are happening there, which is, again, kind of setting up some of these differences. But why would you export crude when you have these distillate margins where they are? And that's, again, going to cap some of that refining capacity and that the margin there, which is why, again, we see this balancing act and we don't see much change from the Brent trading range of that 83 to 87. As we go into September, we think that's going to drift a bit lower and likely, hug closer to 82, 84. We'll still have those spikes back up to 87. But again, you're seeing some of that, that clustering to the lower end. Then when we look at some of the flows coming from Russia, especially when you look at the refined product, just get a little bit of a bounce, but not a huge amount. And it's tough because the countries that were importing Russian product are now big exporters. So they're still going to import some because there's a spread where if they can import Russian, export their own, but not to the same degree. So you are seeing some headwinds, and it's less about demand and it's less about supply and more about the fact that there isn't the same demand that there was. That'll start to reverse as we get into September, October. But this is an interesting backdrop here. Then when we look at Middle Eastern crude flows, you get an idea of what we were talking about, where Saudi has come down, had a sizable drop. But then when you look at Iraq and UAE, you can see that there's been a nice little bounce. So even though Saudi has come down, you're seeing the Iraq and UAE saying, well, we can raise our OSPs a bit. We could still be below Saudi and then take some of that market share, which is what we've seen coming from Iran as well. And as you can see here from Iraq and UAE, while they also hit the market fairly hard by exporting a lot of this product, given the margin in the market. So again, there's a lot of moving pieces, which we'll talk about again in the EIA show. So that's what we have for you today. Hopefully you have a great weekend. We're coming to the end of the summer weekends. So for us, it's going to be pretty low key, some birthday parties, because obviously kids just have endless birthday parties that we get to go to. And we'll talk to you next week. Thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Prime Vision Network.